I think watching key talent flow from incumbent giant companies into new disruptive deep tech companies, I think is the biggest leading signal. Then comes capital, then development partnerships and distribution partnerships,
Totally
then
right.
regulation and revenues.
British success story Wayve is accelerating down the road to revolutionising autonomous driving. And as one of the most exciting AI-native startups to emerge in recent years, it's had no shortage of potential investors. Yet Wayve is among the pioneering companies seeking a different relationship with its funders, looking to partners not just for capital, but for strategic support. So what is the roadmap to navigating this new hypergrowth environment? What are the secrets to securing the right investment, landing the right partnerships, and ensuring long-term success? Welcome to Crafting Capital. I'm Nick Clark. With me to discuss these topics are Carmine Visconti and Alex Kendall. Welcome to Crafting Capital.
Thanks, Nick.
Well, can we start with you, Alex? Tell us about Wayve. What does the company do, and what were the key milestones to get where we are today?
Well, Carl and I just drove here in one of our cars, so maybe that's a good way to explain it. It's Friday night here in London. We drove through the night to the studio here in a car, and sitting in the front seat, didn't have to touch the steering wheel once. And so that car was driven by our AI driver. And for the last decade, we've been building an embodied AI system. So this is a AI that's capable of understanding the physical world and a set of technology that lets us train and understand, evaluate, improve its level of safety for operation. So we've been developing this technology, and what we saw on the drive, I mean, the car was able to deal with, we had a cyclist start towards us without a headlight, and we were able to safely navigate around them. We had pedestrians all around coming through King's Cross. And so the level of intelligence that we're able to enable can let you build autonomous vehicles that, for example, use the inbuilt hardware that's already in mass manufactured vehicles today. For example, let you drive in places we've never been to before. So we've tested this technology all around Europe, Asia, and North America. And ultimately, we believe that robotics and autonomous vehicles is an AI problem. And by developing a more intelligent driver is what's going to let us bring this technology to the world.
Fantastic. And Carmine, you know about the sector, but was this your first ride in an autonomous vehicle? And tell us what you thought about it.
It was super exciting. I mean, you could really feel the intelligence in the car and taking some decisions which were quite complicated.
You're obviously very excited about it. The markets are very excited about the whole sector as well. What can you tell us about where they are right now?
So I know there's a long debate, especially these days, around AI is an hype, is a bubble that is going to blast. But let me begin with a statement. Not every bubble is going to blast. AI is here to stay. Then going specifically to your question around autonomous drive, I don't know what is the answer. I can come with quantitative answers and say, well, it's very easy. Look at the TAM and how large is such a market and the potential to get $1 trillion market size. And that's the quantitative. But I'm probably a little bit more romantic in my answer. It's something that just you can relate as a human, right? I mean, everybody's been driving a car. Everyone has been in some form of transportation and be mobile from point A to point B. And therefore, you can relate. In the same way, I felt it was super exciting.
And investors are really responding. Alex, let's talk about the investment side of things. You've done very successful A, B, and C rounds of funding. I wondered, what do you look for in a partner?
Yeah, I think what I've learned in the last 8 years building the company is that deep tech challenges like this are not built through eureka moments or through sort of one-off ideas. It's relentless 1% growth over a decade that allows you to address a problem like this. So what that means is that during that time, of course, there's going to be ups and downs, but I've really looked to construct around the company a set of investors that are long-term orientated, mission-driven about what we're building. And of course, the impact at the end is going to be tremendous. And I think in the last 1 or 2 years, we've seen a real U-turn in fleets and automakers around the world going from dismissive of this technology to now embracing it and rushing it to market. And so there's a bit about timing here and having the right patient capital to allow for that growth. But if you look at our shareholders and Wayve's cap table, we've got an amazing set of investors from the very beginning, a number of financial investors that have been really fantastic to work with along the way. And then a set of strategic investors that are really aligned with what we're building. And so when you think about all of these names, these are investors that either they're world-class at understanding this technology in this area, and we have great strategic alignment in wanting to bring this platform to the world. Or they're financial investors that are passionate, that have demonstrated experience in deep tech, and have been really great partners.
So they've helped shape the direction of the company as well.
Yeah, I think our investors have been a lot more than just capital, whether it's engagement on company building, regulation, marketing, access to talent, or even commercial partnerships across the board. They've been really close partners with me and my management team along the way. And I think that's really been important to get us going as we've gone through more formative deep tech stages, and now as we enter into commercialization.
And Carmine, this idea of investors as much more partners rather than just providing capital and that's it, is this becoming more common?
Capital is fungible. So therefore, is right that founders and companies have to scrutinize the capital and try to understand what he or she can contribute beyond money. And there is quite a few aspects and application that a provider of capitals can offer to a certain given company, so to have the finance to be the enabler of the vision behind the business, and therefore helping to foster the right culture, the right product, the right go-to-market, the right mojo, right?
And I mean, huge amounts of capital has been raised in the private market for AI native startups, and to get in as early as possible. I mean, can you tell us a little bit about the investment landscape?
Yeah, it's scattered. To begin, you have there is scarcity, especially in Europe and especially at mid-cap level. You don't really know where to invest. At the same time, you have a pressure on the investor side because there's a bit of a FOMO, the fear of missing out. In the public market, you don't have that many AI play that you can try to put your bets on. So therefore, you default into the private market, right? However, in the private market, I would rather say we are still in a moment of workout. Investors are not necessarily crystal clear, and probably that's right, who is the winner, who is the losers, right? And therefore, they are hedging a little bit across the infrastructure layer, all the way up to the application layers. And then you have instead very rare unicorn, right, which are rare by nature, like Wayve, that they cover the entire stack, right? They start from the foundational model, they get everything all the way up until the application, whatever comes with it, and they offer a unique opportunity.
And is there a sense of the size of the market?
Just to give a scale, 100 billion and probably even more so, and this is set aside the circular economy and the public market, has been deployed in AI opportunities, which is lots of money. And sorry, I'm also taking out from this calculation the large LLMs, which every time they need to raise, they are raising on their own hundreds of billions.
For autonomous vehicles, I mean, we're pre-product launch. We're imminently going to launch this, but this is the whole start of a tip of an iceberg of what we can bring out. And the impact it's going to bring is tremendous, of course, whether it's to road safety or, just the ability to give time back from autonomy. I think it's very clear that this revolution is going to start with vehicles, because these vehicles now have the right hardware and sensors on them, and of course we've been able to get the right data and supply chains, and regulation is actually quite in a mature spot. It's in a mature spot for autonomy. It's now legal in many US states. In Europe and the UK, it's going to be legalized next year, and so there's a lot of really good things to celebrate there. But vehicles is just the beginning. When we see this grow into manufacturing, domestic robotics, healthcare, I mean, there's so many other verticals. If you look at stats like 70% of the world's GDP is in physical industries, I mean, AI is not just going to impact the cognitive space, but it's going to really come out in the physical space as well. So investors are excited about that. Finding partners that will cover the R&D and the cost of developing this technology, and then work with us to bridge that gap towards product launch, where this can become a highly profitable and scalable business. That's really what what I've been most focused on. And look, maybe the world of investors that can operate with the kind of business like us There's probably only a few dozen really high quality partners for that. But the great news is there is a few dozen. There's a market for that. There's excitement for that. And I feel really privileged that we can attract the kind of capital to go build what is my life's work and really a dream.
Absolutely. And Carmine, looking at the growth of AI native startups, how are founders, investors and operators thinking about scaling fast in today's market?
So there are two sides to answer that question. So there are businesses like Wayve. Scaling fast is not really an option, right? Because they're operating in a zero mistake, zero tolerance type of environment, and therefore it takes time to build the entire stack ground up, right? And you need 6, 7, 8 years to do exactly what he's describing, right? So the data collection and the infrastructure builder before you get into the application.
We're 8 years in and just getting started.
There you go. You see? And that's one part. Then, of course, you have, without sounding disrespectful, the wrapper. Anyone that can build an AI application on top of existing LLMs. Indeed, they are defining the law of physics, right? So we build SaaS applications, and the typical modus operandi or investors were used to go like a triple, double, alluding to the speed of the scale up, going from 1 million to 100 in 5 years. That was the way the typical software as a service application have been operated. Now the rule has changed. So you all of a sudden find very high velocity, double revenue every other quarter, and getting at the scale which is pretty unprecedented, right? But those are more on the application layer that indeed can demonstrate a high degree of adoption. To the Alex point, indeed the propensity from people to interact with this new technology, and you end up seeing companies AI native becoming extremely relevant in an overnight shift.
Absolutely.
Quite a few are actually Europeans. They've been demonstrating to scale exceptionally fast and like never seen before.
One thing I'm really proud of about what we've built at Wayve is we've been able to bring together frontier embodied AI research, really our core. That's my background. It's a team that's consistently over the last decade put out world firsts when it comes to how to train AI systems capable of doing things in the physical world, and an expertise of a team of how do we actually build scaled, robust and reliable industrial grade products in automotive. And bring those together has been required for success. If we had one or the other, we'd be nowhere.
Yes.
But building both is not only a competitive advantage, it's a requirement for success, I think, in this space.
And obviously a key pillar. Are there other key pillars as well when you're looking to scale a company like this?
So talent's one. We've talked about capital, and I think the other one is the right ecosystem around you. Whether it's Microsoft that supports our large scale compute in the cloud, or Uber that's really the largest mobility network in the world, or regulation. The relationships we've built with key regulators around the world, giving them demos. And so we've been helping write that legislation with regulators and are expecting to see it come into force late next year. That's going to be great. And so it's bringing that conversation, making it accessible, and really, I think, the leadership to inspire what's coming next, bringing together that ecosystem.
That was
what we experienced in the car
That
today.
was inspiring, actually. Europe is not famous for being the easiest for technology businesses, right? And that's mainly because of regulation, right? There is a pretty infamous way of saying that the Americans innovate, someone else imitate, and the Europeans regulate, right? It's not far from the truth, but it's a bit harsh. And in fact, I felt very compelled from the Alex comments around he found European politicians being supportive. So that's a good start. That's a good beginning.
Well, absolutely. And more generally, as autonomous driving moves from this technical innovation to commercial deployment, what signals should investors look for, do you think?
The easiest answer is, well, I'm going to look for revenues. Well, but actually it's too late, right? In reality, you need to look at the signals that are coming ahead of it. And Alex already gave a bit of a glimpse into it. So to begin, partnership adoptions, right? This is such a complicated ecosystem to crack that it has to begin with a proper partnership ecosystems. And therefore you have the NVIDIA and the Microsoft and the regulators and so on and so forth. And the OEM, speaking of autonomous drive. So that's the sign number one, right? So if I were an investor, I will look into the clues and say, okay, these are clear indication something interesting is happening there, right? Boom, one.
And in partnerships, in my experience, we typically see the go-to-market partnerships, the foundational partnerships, that like compute and data and things like that, lead the distribution and customer partnerships. And so I've tended to see a growth journey from go-to-market and development partnerships through to distribution partnerships over time.
Yeah. So that's probably the first sign, and that's your birth certificate, I would say. Then second has to come regulation in this industry. I mean, otherwise it's not permissible to run any business, and you don't want to be a pirate, let alone being illegal. And then finally, as an outcome of number one and number two, and clearly backing the right companies and the right talent, comes the revenue and the unit economics and everything else. But I think that the waterfall has to start with the partnership around who is enfranchising the partners around that solution.
And I've got maybe one more leading signal that I would look for if I was ever in investor's shoes, which is not me, but is talent. So one of I think the biggest signals for a deep tech company is the talent it attracts. And I remember, when we started Wayve, and I got together some colleagues from my PhD lab, and look, we were building and prototyping, but being able to attract talent from the big incumbent technology companies was such a big moment for us, and the impact they brought with their experience and their ability to help us scale was transformative for the company. And so I think watching key talent flow from incumbent giant companies into new disruptive deep tech companies, I think is the biggest leading signal. Then comes capital, then distribution partnerships, then development partnerships and distribution partnerships,
Totally
then
right.
regulation and revenues.
How do you ensure you have the right staff and can attract the top talent?
Long-term relationships is one really big thing. It's a small industry with us in the AI world. Everyone knows everyone, and so reputation and trust over time is one key thing. Second one is, of course, the mission. I mean, we were going out and saying, look, 10 years ago, we're going to go build end-to-end deep learning for autonomous driving. And, a lot of technical leaders were really excited about that. But of course, the momentum and the capital deployment of the existing industry was going elsewhere. And so I think there's a mission that speaks to the right people as a second one. And then third is a sense of partnership. And so I think great people lead to other great people. And I think holding a really high bar, having a really good culture that's inclusive and empowering, this is really critical. And if that's not the case, you can quickly spiral away. But if you get it right, you can attract, empower, retain, and grow exceptional talent.
And Carmine, how do you see that sort of search for talent among AI native startups?
I mean, there's a scarcity, which is good for people, right? Because this talent is scarce, and therefore every time there's scarcity, the price is high. But it's also fair to say quite a few, in fact, are motivated by the mission, right? They back a founder vision. With that preamble, the way talent is operating these days in startup, I guess, is empowerment by design. People feel it, they own it, and they start driving changes. And that's quite frankly quite inspiring. And that's the reason why startups are disrupting the marketplaces.
And if we just return to that idea of startups and financial investors as partners, how do you see the future of that? And will that affect the sort of conversation around exit strategies as well?
That's a good question. So let's break it down. So the partnership, we touched on a few aspects. And as I said, capital is fungible. So as a result, you need to contribute something more. When it comes to the exit, listen, we have been living over the last probably 10 years, a pretty mediocre exit environment, right? You've had lots of startup growing and staying private as long as possible. The private market was not really open for business. And therefore, things have bifurcated a bit. You have had fantastic companies growing at very good rates and becoming large software on AI software house. Others instead, they couldn't manage to grow the business as much as they wanted, and therefore they got stuck. Is this market going to change? I think so, because most companies are reaching a size and a scale where it's becoming even prohibitive for the private market to continue to escort the way in and to pave the way for a better scale up, and therefore it becomes pretty natural to think of public.
And finally, Alex, looking at Wayve's technology, you've excited us already today about that, but you've also said it's the start of the journey. I wonder if we can look ahead. We're not stopping at cars, right? There's a whole load of applications that this can be used in.
Oh, 100%. And as I said, I think cars are coming first. But what I'm looking for is, in other sectors, look, how do you find the way to mature robots or vehicles that have software-defined nature? So when will we see that in other things? When will we see manufacturing plants become centralized and software-defined? When will we see supply chains for domestic robots that have more intelligent hardware on them? That's one thing. Second is, and so that requires some industry leadership and sort of centralization of software platforms. Second is availability of data. And then third, a viable business model, ready market, and good regulation. And I think, we're waiting to see, I think, that happen in other sectors. It'll come. I think, humanoids and other robotics is maybe more like where self-driving was in 2015, is maybe companies that are focusing more at the earlier stage of the hype cycle with expensive hardware build-outs that lack this sort of general-purpose AI view. But I think it'll come over time, and I expect the vast majority of robot manufacturers and operators can't or won't want to build their AI because it's going to be more economic, more performant, more safe to leverage something that we can build at scale. And so I think there's a real place for a platform-based approach to make all of these products possible. And I talked about the application layer where, in big opportunities like automotive, we'll go in and build the expertise, but there's going to be a long tail of robotic applications, and being able to make a general purpose platform possible where a manufacturer that really understands their problem domain, whether it's in, mining, warehouse, sidewalk robots, like some application where you've got some really specific application problems, how can we empower them with their expertise, but give them the intelligence and the safety they need to do it? That's the opportunity we see ahead of us. And I think ultimately this is going to be a $1 trillion market. I think we've got a great opportunity to go play into that. But I can't wait to see how the next decade plays out.
Well, this has been a fascinating discussion. Alex, Carmine, thank you so much for joining me on Crafting Capital.
Thanks, Nick.
Thank you.
With Wayve at the vanguard, the autonomous vehicle sector is one of the most exciting areas for growth and innovation today. And it's an industry that has embraced this shift in seeking investors not for pure financial backing, but to create key strategic partnerships. Get it right, as Wayve has found, and the possibilities are huge. You've been listening to Crafting Capital, a podcast series in partnership with custom content from the Wall Street Journal and UBS. I've been your host, Nick Clark. Join us for more episodes at partners.wsj.com/UBS. And be sure to subscribe on Spotify and Apple Podcasts. The content in this podcast was relevant when published. Current views may differ.